Okay, so this might be my best educational video on YouTube. In this video, I will teach you how to use standard deviation projections, quarterly theory, and power of 3 to take your trades. Now, if you can understand what I'm about to teach you in this video, you will become an independent trader. You will not need anything else. You will only need this to take your trades and pass your challenges or whatever. So let's talk about standard deviation first. Then we'll go and talk about how to use that with power of 3. And we're going to talk about how to use it with quarterly theory as well. So now we need to first of all understand about power of 3. So power of 3 usually has 3 phases. It's going to have an accumulation phase where price is going to consolidate, right? Then we have the second phase where you will see a manipulation. So price is going to take out either the buy side liquidity or the sell side liquidity and then move to the original direction. And the third phase is expansion, right? That's the move that goes in the original direction after taking out some form of liquidity. Now, what if I told you that you can actually measure the manipulation and also the expansion? You will know exactly where the manipulation phase is going to end, and you will also know when the expansion phase is about to start. So you can take and trade that entire expansion move. So if you're interested, keep on watching, right? So as you can see right now, I have this consolidation phase, right? And then we have the manipulation move to the downside, and then we're gonna have expansion. Now, how do you actually measure this, right? So we're gonna use standard deviation to measure our manipulation and the expansion. We will know exactly where the manipulation phase is going to end, and we'll also know how to use the standard deviation projections to take and trade the expansion move. So let's assume that this entire piece of price action, so let me just mark this out like that, is a consolidation phase, right? Now you want to look for a market structure shift. So if we are talking about daily power of 3, so understand this one thing, okay? We are going to trade power of 3, and with power of 3, we are going to use standard deviation and quarterly theory. So the entire strategy you can say is power of 3, but with different things like standard deviation and quarterly theory, it just increases the win rate like way higher, right? So we have accumulation phase, right? We want to look for a market structure shift. Now we still don't have a manipulation phase. We only know the manipulation phase until price hits the -2 and -2.5 area. So if I zoom in a bit here, this area around here is where you should be expecting a expansion move, all right? So first off, just open up your Fibonacci and just use these values, okay? Make sure you copy these, pause the video right now, and yeah. So how do you actually use the standard? So let's say there's an accumulation phase, right? And you want to measure the manipulation move. You want to know when is the manipulation phase going to end so you can then trade the original move. So let's suppose that we are trading the daily power of 3. You want to mark out the opening price of the daily candle. Each and every single candle is going to have a power of 3. Like 95% of the candles are going to have power of 3, right? So mark out the opening price of your daily candle, could be this. You can also trade the weekly power of 3 and monthly power of 3. So we have the opening price, right? Now, in the consolidation phase, look for the last high and the last low. Once you get a shift in the market structure, right, you want to use your Fibonacci from the high to the last low that was here before market structure shift. Now, if price goes up and hits the -2 and -2.5 or below that, it can also go to the -4%, right? That is when you're going to look for a reversal. Reversal means expansion move. You can then expect that price is not going to expand, okay? So now this entire move, right? A lot of people would say, why is this not manipulation? Because that's the thing, we always don't know where is the manipulation. But by using standard deviation, we can anticipate that this is where the manipulation phase is going to end, and from this is where the expansion phase is going to start. So usually know one thing, when we're using standard deviations, you will see most of the reversals occurring between the -2 and the -2.5 level inside this tiny box. Price can also go below the -2.5 and it can also go towards the -4. We will not be sure that price is not going to expand until we have a market structure shift. So now you can see price comes into the -2 and -2.5. That is where our manipulation phase ends. And to confirm that, we have to look for a market structure shift on a lower time frame. So first off, mark out the daily opening price, then drop down to 5-minute time frame. Remember, 5-minute time frame, okay? And on the 5-minute time frame, you have to first look for a market structure shift, right? That is where you're going to predict the manipulation move. That is, you will know where the manipulation move is going to end. So in this case, the manipulation move goes to the -2 and -2.5. Now on the same time frame, on the 5-minute time frame, look for another market structure shift. Now that market structure shift is going to tell you about expansion. It's going to confirm the expansion, all right? So over here, we have a shift in the market structure. Now this is going to be your low risk entry. So you can enter here with low risk, right? But then we have this, the silver bullet entry. Now, before I move to all these concepts, I want to give a huge shout out to these two traders. So for the standard deviation concept, I want to give a shout out to my Dexter trader, if I'm not wrong. And for the quarterly theory, I want to give credits to DAYEE, Die. So you can see we have the low risk entry here, right? But if price reaches the -1 and -1.5 level in between here, that is your silver bullet entry level. You can just take your trade with full confidence. Once price comes into this level, mark out a PD array that is below here, and you can literally take your entry with full confidence, and you can target the -2 level, because inside here you can expect reversals once again. So that would be your take profit level around this level, right? So let's repeat this once more, and then I'll get to the quarterly theory part, and also I'll give you a lot of examples so everything is like crystal clear to you, okay? So accumulation phase, right? We want to identify and we want to project the manipulation phase, where it's going to go and end. To do so, we want to look for, a market structure shift inside the accumulation phase. Once you have a market structure shift, you use your Fibonacci from the high to the low like that, right? And if price goes to the -2 level, right, or inside here or below it, then that is a clean manipulation move, and then you can look for reversals, right, by looking at this. So if price goes to the -1.5 or even here and then goes up again, keep on looking for market structure shift that will provide you with the real manipulation levels, if that makes sense. So how do you actually use quarterly theory, right? I'm not going to go into detail about quarterly theory. You can watch the video by the original author. I'm going to link his video in the description so you can watch it. But to summarize it, we have like 4 quarters, right? 3, 6, 9, 12. So in a year, we are going to have 3 months each for each quarter. So first quarter is going to be accumulation. Then we're going to have months of manipulation, distribution, and then reversal or continuation. Now inside each quarter, we're going to have multiple quarters, like 4 quarters. I wouldn't say multiple, but another 4 quarters. So in quarter 1, you're going to also have accumulation, manipulation, distribution, and continuation. In quarter 2, you're going to also have that. And if we zoom in a bit more, right? If we zoom in a bit more, inside all of those 4 quarters, we're going to have, each one of them is going to have 4 other quarters. So it keeps on going down, right? So that's a little summary about it. So when we're looking at the daily PO3 and by using standard deviation, now if price, reaches the -2 and -2.5 level during the manipulation phase of the quarterly theory, that significantly improves the chance of price reversing and giving you an expansion phase, right? So let's assume that this area is the manipulation phase, and I'm going to give you guys an indicator that is going to tell you about the accumulation, manipulation, distribution phases. So don't worry about that. I'm talking about the quarterly theory, okay? So if price reaches the negative 2.5 level during the manipulation phase, then you can expect a reversal that is going to go definitely into your favor. That is going to be the expansion move, right? So that is really not optional. It is actually optional, okay? Quarterly theory is actually optional. You don't need to use it every single time, but if you do it, that's well and good. So let me give you guys some examples and then I will end the video. All right, guys, so here is example number 1. I'm looking at USD CAD and I have marked out the daily open. Before moving on to the examples, I want to talk about my course plus private Discord server. For just $97 one-time payment, you get access to my private Discord server where I share my own trades, basically signals. Then you get monthly course update with new videos, weekly Q&A and more. Then you got awesome community of successful traders. Now for the course content, you get SMC basics. If you're just starting out with ICT concepts, then we got the basic trading strategies that require no daily bias, so you can trade them without daily bias. We got the ICT essentials, right? These are necessary in order to move to the advanced trading strategies section, and there you will learn all these different videos, concepts about finding your weekly bias, monthly bias, the holy grail, second distribution, market maker model. But we got some proof here, you know, passing the challenge, funded accounts, then my students passing the challenge and getting funded, some proof here. So the price is currently at $97. It might go up to around $200 in the coming months, so make sure you get this. And yeah, so let's move on to the example. So over here you can see we have the opening price, and over here you can see we have a high and the low, and it got violated. So if I use my Fibonacci from the high and low, we are now first of all anticipating a manipulation move, right? So now you can see that price goes up, right? And it just hits the -2 and -2.5, and it goes even lower than that. Now, from here onwards, what we are looking for is a market structure shift, right? Over here, you can see we took out this liquidity, and after that, we had a market structure shift right around here. Now, once you have the market structure shift, you want to simply just use your Fibonacci from the low to the high to, you know, to project your take profit level. And in this case, it would be -2 and -2.5. Your entry could have been from this fair value gap or the auto block here. And if I use the quarterly theory indicator, so you can see that the red box here is the manipulation box, right? The black box is the accumulation, the red box is manipulation, and then we got the green box that is also called as distribution, right? But once you get the manipulation in the red box, you can then expect a distribution. So that's how you can use quarterly theory with this. Let me go to the indicators. You can type in quarterly theory, and it should be by this one, or you can even use this one. Let me disable this. So yeah, that's pretty easy, guys. You first have to, you know, measure the manipulation move, right? And then you look for reversals, then you look for your entries, and that is daily power of 3, okay? So yeah, let's move on to the next example now. All right, guys, so here is another example. I'm looking at Euro USD, and this is again daily power of 3. I have the daily candle opening price marked out here. And if I go here, you can see we have the high, the low, and we got a market structure shift. So now I'm going to use the Fibonacci tool from the, oops, my bad, like that, from the high to the last low before market structure shift. And over here, you can see price taps into this box and also below it, right? Gets close to -4, but afterwards, what do we have? We have a shift in the market structure right there. So now I'm going to use another fib from the low to the high, right? And you can clearly see that you could have gotten your entry from this auto block here. Price gets into it. And if I use the quarterly theory indicator, you can clearly see that we got the manipulation and we dipped into this box here, right? During the manipulation phase. Once the manipulation was over inside this area, we got a shift in the market structure, and we predicted that price gonna hit inside this level, and that's exactly what happened. So I have given you this I have actually given you a superpower This is actually one of the best trading strategies and best ways to trade. And of course, credit goes to the authors. Of course, this is all ICT concepts, but this was taught more in detail by Dexter and by Dai. I hope I'm pronouncing his name correctly. So very simple, using fib from top to bottom to measure the manipulation phase first. Once we have the manipulation, we're going to use the standard deviation tool once again after the market structure shift. And right there, we can see we have a beautiful move to the upside. Let's move on to another example. All right, guys, so here is the last example looking at EURUSD. And this is again daily power of 3. I have marked out the daily candle opening price. And first off, we have a market structure shift here. So I'm going to use the Fibonacci tool from the low to the high. And you can see price never reached the -2 here. But what happened then? We got another market structure shift, right? Now, this is a complex example. We got another market structure shift and the manipulation was actually to this level and not this, because price never reached the -2 and -2.5. So let's remove this. Now this is when the manipulation phase was over, and if I turn on the quarterly theory indicator once again, you can see that the manipulation occurred during the red box here, as you can clearly see. Now let's disable this indicator to make the chart clean. Over here, what do we have? We have a shift in the market structure. So now I'm going to use the tool from the low to the high. And I could have taken my entry from the auto block, right? Or the 50% of this wick. And you can see that the take profit level was hit just around here at this level. So that's pretty much it, guys. I hope you guys enjoyed today's video. Of course, I'll get into detail in my upcoming videos on this topic, but for now, this should be enough, and it should be enough for you to backtest and work on this. I'll see you guys in the next one. Goodbye.